Global Monetary Watch is here to provide a grounded perspective on the current state of the Iraqi dinar, moving past the extremes of both unbridled optimism and harsh skepticism to focus on the economic mechanics that truly dictate financial shifts. In a landscape often cluttered with conflicting reports and emotional narratives, understanding the actual trajectory of Iraq's monetary policy requires a look at the data provided by official institutions and the structural changes happening within the Middle Eastern nation's financial core. Whether you have been observing these developments for over a decade or are a newcomer to the topic, the objective of this analysis is to strip away the noise and present a fact-based evaluation of where things stand today. This is about recognizing the difference between mere hope and disciplined preparation, ensuring that those interested in the subject are equipped with a clear-headed understanding of how global finance operates in relation to developing economies. This information is intended for educational purposes and is based on publicly available data, central bank communications, and established geopolitical context, rather than speculative rumors. The official exchange rate of the Iraqi dinar currently maintains a steady position at approximately 1,310 dinar per US dollar, a figure that has remained relatively fixed despite the anticipation of many observers. This stability is not an accident of the market but is instead a deliberate and calculated policy choice by the Central Bank of Iraq, often referred to as the CBI, which prioritizes a predictable monetary environment over volatile swings. For the CBI, the immediate goals are centered on three specific pillars: maintaining currency stability, curbing inflation to protect the purchasing power of the domestic population, and modernizing a banking infrastructure that has long lagged behind international standards. By keeping the rate locked at this level, the central bank is attempting to build a foundation of credibility with international markets, showing that it can manage its currency with the discipline required of a modern nation. While this lack of movement might be seen as a delay by some, from a macroeconomic standpoint, it represents the patient construction of the fiscal health necessary for any future adjustments to be sustainable. One of the most frequent topics of discussion in the community involves the possibility of a sudden and dramatic upward revaluation of the currency. Yet it is essential to look at this through the lens of modern monetary history. In the current global financial system, there is almost no precedent for a currency to jump from a rate of 1.310 per dollar to a significantly higher value like 1 to 1 or 3 to 1 overnight without the underlying economic fundamentals to support such a massive shift. The value of a nation's currency is not a figure that can be changed by a simple decree in isolation. Rather, it is the result of a complex and interconnected web of factors, including the growth of the gross domestic product, the diversity of the economy, and the depth of foreign exchange reserves. For Iraq to see a meaningful change in the international value of the dinar, it must first address its trade balances, debt obligations, and the overall confidence that global financial markets have in its political and economic stability. Acknowledging these hurdles is not an act of pessimism, but is a necessary step in making a realistic assessment based on how international finance actually functions. Iraq's economic strength is undeniable when looking at its massive petroleum reserves, which rank among the largest on the planet and provide a consistent stream of revenue as global energy demand remains high. However, economists frequently point to a phenomenon known as the resource curse, where a country's heavy dependence on a single commodity like oil can actually hinder the development of a diversified and resilient economy. Because the majority of Iraq's revenue is tied to oil prices, the value of its currency often reflects the volatility of the energy markets rather than the internal growth of its non-oil sectors. For the Iraqi dinar to experience a genuine and lasting increase in value, the government must succeed in its long-term goal of diversifying the economy, reducing its reliance on oil exports, and fostering growth in areas like agriculture, technology, and tourism. This transition is a monumental task that requires years of consistent policy and domestic stability, and it remains one of the most significant factors that will determine the currency's future trajectory. The story of banking reform in Iraq is perhaps the most substantive and least understood aspect of the current situation, as it involves the slow work of modernizing a system that was once entirely cash-based. In recent years, the CBI has made a concerted effort to expand electronic payment infrastructure and encourage the Iraqi population to move their funds into formal banking institutions. This shift is critical because a transparent and digital financial system is a prerequisite for any nation wishing to integrate more deeply with the global economy and attract foreign direct investment. By reducing the reliance on physical cash transactions, Iraq is also working to mitigate the risks associated with the informal economy and ensure that its financial flows are monitored and recorded according to international standards. These reforms are the below-ground work of building a financial skyscraper. While they may not be visible to the casual observer, they are the essential structural components that allow for future growth and international legitimacy. Another vital piece of the puzzle is the restoration of correspondent banking relationships, which are the partnerships between Iraqi banks and major global financial institutions that facilitate international trade and currency exchange. For many years, international banks were hesitant to work with Iraqi counterparts due to concerns over compliance, anti-money laundering protocols, and potential exposure to sanctions. Iraq has been working diligently to adopt global standards for financial transparency, and while the process is ongoing, there has been measurable progress in rebuilding these essential links to the world's banking hubs. As Iraq demonstrates its commitment to these international protocols, it slowly removes the barriers that have historically kept its currency isolated. This process is not instantaneous and requires a track record of compliance that can only be built over time, but it is a necessary step toward the dinar becoming a more liquid and internationally recognized currency. Transparency and the fight against corruption remain at the forefront of the challenges facing the Iraqi economy, as these issues directly impact the level of trust that international investors place in the country. There have been genuine legislative efforts to improve accountability within government financial management, aiming to ensure that the nation's vast wealth is utilized for infrastructure and economic development rather than being lost to systemic inefficiencies. While no one would argue that these efforts have been perfected, the fact that they are being addressed through institutional changes is a positive sign for the country's long-term fiscal health. For those monitoring the dinar, the success of these anti-corruption measures is a far more reliable indicator of progress than any social media rumor or speculative headline. It is the slow, often tedious process of legal and institutional reform that creates the environment where a currency can eventually find its true market value. There is a persistent and often costly misunderstanding regarding the concept of dropping the zeros, a term that refers to a technical redenomination of a currency. Redenomination is an accounting reform. Forex replaces old banknotes with new ones at a fixed ratio, such as exchanging a 25,000 dinar note for a 25 dinar note without changing the actual purchasing power of the money. In this scenario, the price of goods and the value of wages would adjust proportionally, meaning that a loaf of bread that once cost 1,000 dinar would now cost 1 dinar in the new currency. For someone living within Iraq, this makes daily transactions simpler and reduces the need to carry large stacks of cash, but it does not represent an increase in wealth for the holder. Crucially, a redenomination does not multiply the value of the currency held by international investors. It is a neutral event intended to improve the efficiency of the domestic economy, and it should never be confused with a revaluation. A genuine revaluation, by contrast, is a deliberate upward adjustment in the exchange rate of a currency against other global currencies, driven by improving economic fundamentals and market demand. While revaluations have occurred in other nations throughout history, they are typically the result of sustained economic growth, increased exports, and high levels of foreign currency reserves. If Iraq continues on its current path of reform and manages to maintain political and regional stability, a gradual and measured appreciation of the dinar is a scenario that many economists view as a realistic possibility over a multi-year timeframe. This type of appreciation is rarely the explosive, overnight event that many hope for, but is instead a slow climb that rewards those who understand the macroeconomic cycle. Realizing that these two events, redenomination and revaluation, are fundamentally different is one of the most important lessons for anyone following the Iraqi economy. Looking at a 3 to 5 year horizon, a balanced assessment suggests that Iraq could see modest gains if it stays the course with its banking and legislative reforms. The country benefits from a young and growing population, significant untapped potential in sectors outside of energy, and continued engagement from international bodies like the International Monetary Fund and the World Bank. These organizations provide not only technical assistance but also a layer of external accountability that encourages the Iraqi government to stick to its fiscal promises. However, these positive tailwinds must be weighed against significant headwinds, including the ever-present threat of regional geopolitical tensions and the inherent volatility of the global oil market. Because Iraq's revenue is so closely tied to a single commodity, any major dip in oil prices could quickly erase years of fiscal progress, highlighting the importance of diversification as a stabilizer for the currency. The political landscape in Baghdad also plays a critical role in the future of the dinar, as fragmentation and governance challenges can slow the implementation of necessary economic laws. For a currency to strengthen, the international community needs to see a stable government that can protect investments and maintain a consistent regulatory environment. While there have been periods of improvement, the regional situation remains complex, and any major security setback could negatively impact the timeline for currency reform. Therefore, a disciplined observer must monitor not just the central bank's announcements, but also the broader political and security environment of the Middle East. Success in this space is not just about numbers on a ledger. It is about the overall health and stability of the nation, state, and its ability to function within the global community of nations. If a meaningful change in the value of the Iraqi dinar were to occur, having a professional and well-researched exit strategy would be the most important factor in determining an individual's financial outcome. In the world of legitimate global finance, there are no shortcuts, secret deals, or private redemption centers that offer special rates to a select group of insiders. Any exchange of a significant amount of foreign currency must take place through regulated financial institutions, such as major banks that have the liquidity and the legal authorization to handle such transactions. Believing in narratives of back-channel arrangements is a dangerous path that often leads to exploitation, as real currency exchange is a standardized process governed by strict laws and regulations. Knowing this in advance allows an individual to approach the situation with the professionalism and caution required for any significant financial move. The most effective way to prepare for a potential exchange is to identify major, federally regulated banks in your area that specialize in foreign exchange services and to establish a relationship with them before you ever need their services. Not every local bank branch is equipped to handle large amounts of exotic currency, so researching which institutions have robust foreign exchange departments is a vital step. When the time comes to execute a transaction, the professional approach is to call the bank in advance and schedule an appointment, rather than walking in unannounced with physical currency. By explaining your intentions and asking about their specific procedures for large transactions, you demonstrate that you are an organized and serious client. This proactive communication helps the bank manage its own compliance requirements and ensures that your experience is as smooth and transparent as possible. Understanding the spread is another critical component of a successful exit strategy, as this is how banks earn their profit on currency transactions. The spread is the difference between the rate at which the bank buys a currency and the rate at which it sells it, and in the case of less common currencies like the dinar, this margin can typically range from 5 to 7%. On a large transaction, a difference of even 1 or 2% can represent a significant amount of money, which is why it is essential to shop the rate among several different major institutions. No one should assume that the first bank they speak to will offer the most competitive terms. Comparing the offers from multiple reputable banks is a standard practice for anyone involved in high-value financial transactions. This level of diligence ensures that you are retaining as much of the value of your exchange as possible. When you are actually at the bank performing an exchange, it is standard professional practice to insist that the currency is verified and counted in your presence using high-speed counting machines. This provides a clear and immediate record of the denominations being exchanged and protects both you and the institution from any discrepancies or misunderstandings. You should always request and keep a detailed breakdown of the transaction for your records, as this documentation will be necessary for your own financial planning and for any future interactions with tax authorities. A legitimate bank will have no issue with you being present during the verification process, and their willingness to be transparent is a sign that you are working with a reputable organization. Maintaining this level of involvement in the process is not a sign of distrust, but is simply a hallmark of sound financial management. One of the most overlooked aspects of currency exchange is the tax obligation that arises if you realize a profit on your holding. If you receive more in US dollars than you originally paid for the dinar, that gain is potentially taxable under federal and state law, and the way it is categorized can have a massive impact on your final net proceeds. The difference between being taxed at an ordinary income rate versus a long-term capital gains rate can be substantial, depending on how long you held the currency and how the IRS views the transaction in your specific case. Because tax laws regarding foreign currency can be incredibly nuanced and subject to change, it is essential to consult with a certified public accountant or a tax attorney who has specific experience in this area. No online forum or video can provide the personalized legal and financial advice that a qualified professional can offer. A hallmark of a disciplined investor is the habit of setting aside a significant portion of any financial windfall into a separate, untouched account specifically for future tax payments. This ensures that when tax season arrives, you are not caught off guard by a large bill that you no longer have the liquid funds to pay. Many people make the mistake of assuming they will figure out the taxes later, only to find themselves in a difficult position after spending their proceeds. By immediately segregating your tax reserves, you protect your financial health and give yourself peace of mind. While that money is sitting in reserve, it can be placed in low-risk, interest-bearing accounts like U.S. Treasury securities or FDIs, insured certificates of deposit, allowing it to remain safe and accessible while still generating a modest return until the tax bill is due. Emotional discipline is perhaps the most valuable asset any person can have when following a topic as long-running and speculation-heavy as the Iraqi dinar. It is easy to get caught up in the cycle of hope and frustration, especially when months or years pass without the dramatic changes that many have predicted. However, the individuals who tend to fare best in any financial endeavor are those who maintain a rational framework and do not allow their decisions to be driven by excitement or fear. The dinar community has often been targeted by those who use emotional triggers to push misinformation, and the best defense against this is to remain grounded in economic reality. If you find yourself reacting emotionally to a piece of news, it is a sign to step back, look at the official data, and reevaluate the situation with a clear mind. Staying informed through credible and official sources is the only way to ensure you are getting the full picture of Iraq's economic progress, rather than relying on rumors from social media or anonymous insiders. Focus on the official reports released by the Central Bank of Iraq, the International Monetary Fund, and reputable global financial news organizations. These institutions provide data-driven analysis of Iraq's inflation rates, its foreign reserves, and the progress of its legislative reforms. By following the paper trail of official policy, you can see the actual steps being taken by the Iraqi government and the international community to stabilize and grow the economy. This fact-based approach may not always be as exciting as a sensational headline, but it is the only way to build a reliable understanding of the situation. It is also important to be aware of the numerous scams and bad actors that frequently appear in the foreign currency space, often preying on people's hopes for a quick return. These individuals may claim to have secret information about an imminent revaluation, or they might try to sell dinar at highly inflated prices under the guise of an exclusive opportunity. Some may even try to charge fees for access to private groups or special redemption tiers that do not actually exist in the real banking world. The golden rule of currency exchange is that if someone is asking you for money in exchange for secret, knowledge, or preferential treatment, they are likely trying to exploit you. In legitimate finance, information is shared through official channels, and transactions happen through transparent, regulated institutions. Protecting yourself from manipulation requires a healthy dose of skepticism toward any claim that sounds too good to be true or that is accompanied by a sense of extreme urgency. Scammers often use the pressure of a limited-time offer to force people into making quick, poorly researched decisions. In reality, the economic reforms of a nation-state like Iraq do not happen in secret, and they certainly do not happen overnight in a way that only a few insiders can profit from. Real wealth is built through patience, education, and the diligent application of sound financial principles. By ignoring the hype and focusing on the verifiable facts of Iraq's economic journey, you place yourself in the best possible position to navigate whatever the future may hold for the currency. The current situation of the Iraqi dinar is a story of a nation in transition, working to overcome decades of isolation and economic struggle by building a modern financial system from the ground up. The rate of 1.310 remains the anchor of this process, providing the stability needed for the country to implement its 3 pillars of reform. While the journey has been long, the progress in banking modernization, anti-corruption efforts, and international compliance is real and measurable. These are the building blocks of a credible currency, and their success or failure will be what ultimately determines the dinar's international value. For the observer, the key is to stay patient and continue monitoring the macroeconomic indicators that actually matter, rather than getting distracted by the noise and confusion that often surrounds this topic. Global Monetary Watch is committed to providing this kind of clear, neutral, and fact-based analysis because we believe that our community deserves better than rumors and hype. Our goal is to empower you with the information you need to think for yourself and make decisions based on reality, not on the predictions of others. We believe that by fostering a community of informed and disciplined individuals, we can all navigate the complexities of global finance with greater confidence and clarity. The path of the Iraqi dinar is just one part of the larger global economic story, and understanding it requires a commitment to lifelong learning and emotional groundedness. We are grateful to have you with us on this journey of discovery and analysis. In summary, remember that the Iraqi dinar is currently stabilized at 1.310 as a matter of policy, and any future change will be the result of a long process of economic reform and political stabilization. Redenomination is a technical change that does not increase wealth, while revaluation is a process driven by market fundamentals. If an opportunity for exchange ever arises, it should be handled through major banks with a professional approach, a clear understanding of the tax implications, and the discipline to set aside reserves for your obligations. Avoid the distractions of scams and insider hype and keep your focus on the official data provided by the CBI and international financial institutions. By staying organized, informed, and emotionally balanced, you are using the most powerful tools available to any person engaged in the world of finance. Thank you for your time and for being a part of this community focused on factual economic analysis. We will continue to monitor the situation in Iraq and provide updates as new, verifiable information becomes available. Our commitment remains to give you the most accurate picture possible of the global monetary landscape, helping you stay ahead of the curve through education and discipline. Until our next update, stay focused on the facts, keep your financial preparations in order, and take care of your long-term goals. This has been a comprehensive look at the state of the Iraqi dinar, and we look forward to continuing this conversation with you as the economic story of Iraq continues to unfold on the world stage.